Morning, everyone. I'm David Talbot, Managing Director, Head of Research at Red Cloud Securities. Very pleased to have with us today our keynote speaker, Grant Isaac, CFO of Cameco. Grant joined Cameco as Senior VP Corporate Services in July 2009. 2 years later, he was appointed Senior VP CFO, providing oversight for finance, tax, treasury, investor relations, strategy, risk, and marketing for the company. Thank you for joining us today, Grant.
Yeah, thanks, David. It's great to be here. You've been a constant presence in the uranium space the whole time I've been involved, and I would say an astute observer as well. So it's always good to be a part of a part of your event. And I think the theme you picked is very, very appropriate this year. The idea that there's a transition that's occurring here, and it's real and it feels different this time, but maybe take a pause to learn some of the lessons from last time to apply and figure out how we can all sort of benefit from this growth. So thank you.
No, exactly. Almost a split theme here today between the keynote, obviously our topic here, nuclear fundamental role in net zero, applying past lessons to capitalize on growth. So I think, we're going to have largely a top-down ESG kind of conversation here. Later on today, we're going to get to a fireside chat talking about how investment is different, and I think a large part of that is going to be really driven by the physical uranium sector and how that purchasing has changed. But I think a couple of years ago I did host another conference that focused on green energy, and I invited uranium companies, lithium, cobalt, graphite companies. My logic at the time, you just can't charge a Tesla on coal generated electricity and expect anything to change. And that conference was a success, but I don't know if that cross commodity theme of uranium and clean energy, global electrification really had the impact it's going to have today. So, I think right now, call it a perfect storm. You've got ESG interest, you've got a hot uranium market, you've got this new Biden administration really pushing the nuclear and hydro agenda as being the only key sources of baseload. I think it really is the world is finally embracing part of this clean energy solution. So, I think, yeah.
Yeah, we certainly don't disagree with that, David. And as a bit of an opening observation, and to be tested over the course of the next 40 minutes, of course, if you don't agree with it. But we think that one of the key things that's very different this time is that investors have the opportunity to play a far more direct role in value creation in the nuclear fuel cycle than they ever have before. Because let's face it, it's investors that are driving the net zero and the ESG mandates and the accountability for that. It's investors who are controlling the supply side signals that are being sent to the utilities. And so that's a pretty exciting evolution for us too. And I would just say great time to be an investor in this space.
No, absolutely. Investors, we are sort of hugging the supply side, right? We invest in uranium companies. We, not as junior investors do we look over at utilities. So, but ultimately, the demand outlook, I think, is what really drives the sector, not necessarily investment on the supply side. So, looking at the demand side, what's different this time around for the nuclear industry?
Yeah, it's a great question you ask, and one that we sort of do this lessons learned exercise. And I know the commitment here is not to turn this into a Cameco commercial, and I don't intend to do that, David. But really, we're constantly asking ourselves, what's different this time versus last time? What's following a familiar, repeatable pattern from last time? And we're constantly doing that. So I may kind of use some of our examples, because what we do and why we're doing it is because of these lessons learned and how we're applying them today. On the demand side, I think it's just a whole basket of good news, because we have the possibility of a really durable demand story in nuclear in a way that's different last time. In the past, we've always needed really governments to take the lead on nuclear. We've needed public policy to take the lead on nuclear, to say, yeah, we're okay with nuclear, we're going to get behind it. And then, of course, governments are quite shy from a public acceptance point of view, and they test the polls and they say, well, maybe there's a little bit of resistance there. Maybe that's not the direction we've been going. So we've had to focus on that and rely on it. What's different this time is net zero. And net zero, not just adopted by governments, but by private companies as well, because it drives what we call an electron accountability. Because companies who used to be energy takers, they used to be able to just throw up their hands and say, hey, I built my plant here because there was a good labor force, or I built my plant here because there was tax abatements. I plugged into a grid, but I had nothing to do with that grid. It's not my problem. It's coal fired. It's not my problem. It's natural gas fired. But now they're accountable for it. And so the questions are really being asked by some of the biggest companies in the world. Hey, where are my electrons coming from? And in fact, are they clean? And it creates an accountability for what really matters, and what you've pointed out in the past and pointed out again today. You can talk about hydrogen and you can talk about electrifying transportation, but if you're doing that on a dirty grid, you're actually not solving the problem. So it all starts with the grid. And so for us, what creates the possibility of a really durable demand here is that this electron accountability isn't at the whims of public policy anymore, the way it used to be in the past. When the companies are getting behind it and say, it matters, I need the clean choices, and they're being told, well, you've got clean energy for 4 hours a day when the sun is shining and the wind is blowing. What is it for the remaining 20 hours? Well, it's probably natural gas, or it could be coal. It's not good enough. And the companies are saying, where's the 24-hour, 7-day-a-week, every week of the year solution? And then you're really talking about hydro or nuclear. So it's clearly back in the toolbox in a way that it hasn't been for a number of years. And it has a feeling of durability to it that we didn't have last time.
No, and you mentioned earlier, that this is sort of, the governments are testing the waters, if you will. Uranium, people didn't know whether to love the industry or hate the industry, but Trump was always a supporter, the administration there, and that's no secret. Biden, is coming out and being a proponent of the industry as well. Do you think that is changing everyone's perception of the industry as a whole?
Yeah, I think there's a couple of pieces at play here. And one, I'll actually step right past the public policy debates, and I'll go to, like, my kids. I got teenagers. I got teenagers who are absolutely convinced that the global invisible enemy is carbon. It's not radiation anymore. So they don't enter the discussion with a bias against nuclear the way sort of my generation might have, and then had to be convinced it should be part of the solution. They start with, hey, the invisible enemy that we all have to worry about is carbon loading. And so anything that deals with that problem should be on the table. Then, of course, you have a public policy environment that has sort of learned these lessons. Our industry has 3 events to it, and everybody knows them: 3 Mile Island, Chernobyl, and Fukushima. And a very familiar pattern emerged, and that is nuclear gets thrown out of the policy toolbox. It does not get replaced with solar and wind. It gets replaced with coal and fossil fuels. And then policymakers, as time goes by and the fears give way to facts, policymakers scratch their heads and they go, well, why aren't we turning the corner on this whole carbon thing yet? And they realize, because they took one of the most important solutions and parked it on the sidelines. And then we start to see nuclear come back into the policy toolbox. And that's where we are today. In the US, I think it's very deliberate that the federal government uses the term clean energy. I mean, that's code for hydro and nuclear also count. That's why they don't use the term renewable energy. And really, you're starting to see a mapping of the federal support behind where some states have already gone, which is to recognize nuclear as clean energy. And why did it start at the state level? Well, because that's where the grid is, and that's where the concerns about the grid and how clean it is are. And we're seeing it repeated in Canada. Why is it a set of premiers who are behind SMRs? Because they're the ones who have the responsibility for the grid and what's powering it. So it is just a much different environment, starting with the generations that are coming up that don't reject it out of hand, and the policymakers who say, if we're really going to do something about this energy transition in a meaningful way, we can't ignore it.
Mm-hmm. Yeah, so I still see the feds getting involved in saving, for I guess want of a better term, saving some of the reactors that are not doing so well in some of the states. And this is sort of a new step, right? It's always been states that have taken care of their own. And but this time around, it looks like the feds are going to step in, add tax credits and carbon credits and things to help the economics of some of these reactors.
Yeah, that absolutely seems to be the case. Of course, the driver being the recognition that if you let these reactors retire early, you pretty much offset all of the gains that are made from all of the wind and solar that's been installed in the US. Like that's how big of a contribution to the clean energy that they actually make. So when you put out a target like they did recently by 2035, net carbon zero in the electricity sector in the US, why start way back deep in your own end zone? And so I think there's a recognition there that keep the clean energy you have and then build on it. And I think that's good. Now, of course, the real solution is to fix some of the market failures that plague nuclear energy. I mean, nuclear energy in a lot of those US markets is not rewarded for its clean energy contribution, for its security and reliability. And if it was, and it was priced accordingly, you wouldn't have to save it through tax advantages and things like that, or direct subsidies. So hopefully this is bridged with a real focus on the market failures, the feed-in tariffs for renewables that come to the front of the line, like you folks were dealing with in Ontario for many years. Those create a market distortion. They're that so-called snake eating its own tail. You've got a subsidized basket of electricity. It comes to the front of the line. Who's it subsidized? Oh, by the baseload producers who you're squeezing out, right? And eventually that snake is going to bite into something meaningful. And it really will be a failed policy like it was in the province of Ontario, which is now sort of back on the nuclear bandwagon. So tax advantages today, but hopefully it's real structural change to deal with market failures in the future. And then nuclear can stand kind of proudly on its own as the clean energy solution.
Yeah, no, let's hope it goes in that direction. So if let's say the U.S. does have a strong nuclear industry, and maybe we're focusing on the U.S. right now because it's still 20% of the world's reactors, a little bit over that. But there are policies in place to help the industry. Has any of that trickled down into the uranium side of things, which is more apt for a lot of our investors? I think looking back at, let's say, the nuclear fuel working group, what sort of came out of that was this fuel buying plan, the uranium reserve, if you will. I'm seeing that it's a positive step, but if that's, let's say, sub 2 million pounds a year, does that do much than maybe keep two small mines on, or two average US ISR mines on up and running? What's sort of your take out of what the US has been doing for the uranium sector?
Well, our take is that the U.S. is focused now on where it should have been all along. There is no substitute for utility demand in our market. There just absolutely isn't. The utility demand that comes to the market in a term contracting cycle at a minimum of replacement rate, that's what creates true price formation. So if you want to help the front end of the nuclear industry and the nuclear fuel cycle, then solve the problems that are keeping the fuel buyers from having enough confidence in their future that they start contracting. That is what will float the front end of the nuclear fuel cycle. Thinking about saving the front end of the nuclear fuel cycle when there isn't a demand to push it into is kind of the wrong way to solve the economic equation. So some of the things have been interesting coming out of the nuclear fuel working group. Certainly the interest in the concentration of supply globally, and the fact that it's highly concentrated, and it's highly concentrated in the hands of some state-owned enterprises who, at a minimum, probably don't play by the same balance sheet rules as a commercial operator. At a maximum, might be instruments of national or geopolitical goals of their home country. And so that critical minerals, that focus on like-minded countries, that was a good result of the nuclear fuel working group for sure. But we've often remarked the 150 million or the 75 million for a strategic uranium reserve might be better spent keeping reactors alive so that the demand is there, because if the demand is there, it's going to take care of the front end of the nuclear fuel cycle. And you don't think I'm right about that? Well, that's what happened in conversion over the last 2 years. Once the demand was there, conversion was shored up, the market worked.
Yeah, yeah. Well, keeping reactors alive, I think that's largely a U.S. question in our eyes. And in this, I guess, new age of ESG, do you see potential? What do you see the changes in the financing options for, let's say, nuclear power? Do you think you mentioned state-owned enterprises? They're going to push forward their agendas and their builds elsewhere. Do you think things are going to change in the US, that maybe some of these utilities can suddenly afford to build more reactors?
Well, that's a great question. And it's the reminder that not all markets in the US are the same. I mean, where we've seen new build in the US is in the regulated markets, where they truly are making 40, 60-year decisions about baseload power. And where they're struggling is in the merchant markets, where there's an expected return in a short period of time, and building a reactor just doesn't seem to fit into that return model. But I'm optimistic about what's possible here, because in a world of electron accountability, in a world where the big industrial users of power have these net zero targets, and they're demanding that their electrons coming down the line are from clean energy, you can begin to see quite a robust formation of clean energy markets, where you're buying 24-hour power directly from a nuclear reactor, for example. So the business model for the nuclear power plants to be not just grid supporting or grid following, but be the producers for whether it's the transportation network or the computing network, the green hydrogen plays. That creates some pretty exciting financing opportunities for the nuclear operators that they probably wouldn't have been able to enjoy prior to the shift in focus of electron accountability.
Okay, so you as somebody that actually speaks to nuclear utilities around the globe, what sort of update can you give us with respect to nuclear builds, China, EU, India? Have we, what sort of trends are we looking at right now?
Yeah, it continues to just strengthen again, and part of why this feels a little different than last time. I mean, we just saw China come out with new numbers, and I think not as hard on the goals as they have been in the past. I think that's more a function of there's a lot of embarrassment when they don't achieve their goals. And so I think there's been a little reluctance to put out the hard kind of numbers they did 5 years ago and 10 years ago. But we're clearly seeing with their net zero by 2060 goal, we're seeing a real recognition that nuclear needs to be a pillar of that. And remember, just before Christmas, some information kind of leaked out from the 5-year planning cycle that said, nuclear's contribution to the 2060 net zero goal is about, 200 gigawatts of nuclear power, which, you might say, well, that doesn't sound like a lot. And it's, well, wait a second, they were at about 50 reactors at the time. So that's 200 reactors. At 200 gigawatts of nuclear power, they're consuming 100 million pounds per year alone as one country, which is double where the US is today. And they don't have a lot of indigenous resource. So it's a huge growth plan, not relative to some of the other electricity production plans, but relative to our little industry, it's absolutely massive. You look across to the EU, you see new build happening in the UK. You see some countries taking a relook because of net zero carbon targets. You see the debate at the EU level about the inclusion of nuclear in the taxonomy, and quite frankly, the success that the nuclear industry is having in a way that I would suggest they wouldn't have been having just a few short years ago. Look over at the IEA, wrote a very comprehensive report on you can't achieve Paris targets without nuclear. It's been 25 years since the IEA said anything about nuclear power. So just right across the board, nuclear is part of conversations that they've never been in before. Here in our own country in Canada, like David, could you have imagined a couple of years ago a federal minister standing up and saying there's no path to net zero for Canada that doesn't drive by a nuclear reactor? Now, of course, he's pinning it on SMRs and advanced nuclear reactors, but the point is he's saying nuclear absolutely needs to be a fundamental part of it. So we're just seeing these positive indicators drop by drop by drop, and you look over and the bucket's getting pretty full.
Yeah, those SMRs might be the wild card. We don't quite know how much those are going to use, and it's not new technology. They've used SMRs in the military for years and years. Pushing the aircraft carriers around the ocean. So
you're absolutely, yeah, you're absolutely right about that. There's a bit of a risk to the SMRs in the way they're being pitched. And only our industry would trip over its own feet this way, right? Like when Boeing introduces the 787, they don't say, and good God, don't ever fly on a 777, right? Like, but SMRs are being packaged as, well, we're going to come along and solve all the problems with old traditional nuclear. And it's absolutely the wrong thesis. The thesis should be, we're coming along with a technology that's packaged to bring all of the benefits of nuclear power to those areas where big nuclear doesn't make sense. So, what we've got to do is say, oh, you want to talk about SMRs? Great, let's talk about them. And if you like what you hear, look at all these big, beautiful existing assets that are already doing all of those things, and create kind of a rising tide for the whole nuclear story. But too often, the SMRs are like, well, we're here to fix all the problems in the industry. And like I said, the airline industry would never do something so short-sighted.
No, it should be us and us, not us and them. So, and that, a bunch of SMRs coming online are going to really throw the nuclear reactor count out the window. I don't like using reactor counts anyways. I did a study maybe 3 or 4 years ago. 10 reactors went offline, 12 reactors came online. Those net 2 reactors use twice as much uranium, right? The new reactors are just bigger. So
yeah, that's the right way to look at it.
Good. Okay. Well, why don't we move on to the next topic? Fuel cycle in the uranium market. I think a lot of people are interested in that these days, because it's really a hot topic right now. If we have demand that's improving and the supply outlook is uncertain, why is uranium price not at a level yet to incentivize new production? Well, it comes down to that.
Yeah, there is the question, right? It's the question that we sort of ask and study and evaluate every single day. And let me go back to something I said earlier, which is there is absolutely no substitute for utility demand. There's no substitute for a term contracting cycle that's buying at least what they've consumed in a year on a forward basis, or perhaps even more because they recognize there's a capacity issue. So for us, we look at it and we say, well, good news is the demand outlook is going up, and we feel really confident about that. And that should drive up those so-called uncovered requirements that we always focus on. And we're seeing some upside now to the uncovered requirements view. I would say the good news is that some of the utilities get it. You've heard us report that we've now contracted about 60 million pounds forward since our supply discipline strategy started, because there are some utilities who are saying, I'm starting to feel a bit of a sense of scarcity going forward, and it's important to start to lock in some supply. And so that's very good news, and there's no doubt about it. But you're absolutely right by saying that there is a critical mass who still don't see the urgency. And that's why we don't see RFPs hitting the market frequently and placing that consistent term demand into the market and giving sellers, the confidence they don't have to chase that RFP because they don't know when the next one's coming, right? So we haven't seen that yet. And in the spirit of lessons learned, let's just kind of walk through why we think we haven't seen that. And as I do it, don't be confused. I don't agree with the view of the utilities who don't feel the urgency yet. I think they're on the wrong side of the trade, historically speaking, and on a go forward basis. But I can share with you what we're hearing from them. And then I'll also make the pitch that investors have a very significant role to play in this problem. So when I look at this mass of fuel buyers, I'm reminded that it's not like we're talking to folks who are saying, look, I don't think demand's going up, or I don't think there's a supply capacity problem. It's just they're willing to take the bet that supply will front run the demand. In other words, they're willing to take the bet that a transition doesn't need to occur because there'll be so much exuberance on the supply side. Investors flooding in, $1 billion raised in the uranium segment, that yes, demand is going up, but all this supply is going to go forward and it's going to clear the market and there doesn't have to be a price transition. But most importantly, and here's the lessons learned, they can take that bet because there's zero consequence if they have it wrong. Zero. So it's a free option for them because if they're wrong, and I think they are the wrong side of that trade, they quickly switch from, well, I'm holding out because I'm price sensitive, to I'm now buying because it's security of supply mandate. And you want the data for that? 2006, 2007. The signals were being sent in the early 2000s. Low prices were not creating the supply necessary to keep pace with demand. They were ignored. Instead of buying uranium in the teens in prices, fuel buyers ended up buying a lot of uranium $50 and up, right? And it was the same fuel buyers because now they're buying for security of supply. Guess what? They did it again in 2010, not because of a supply shock, but because of a demand shock. The Chinese utilities moving into the market for the first time, gobbling up the future demand or the future supply, creating a sense of scarcity, and they just bought at higher prices. Same fuel buy. We just went through it in conversion. We couldn't beg utilities to buy conversion 2 years ago. Didn't need it. There'll never be a shortage of conversion. Well, suddenly there was a shortage of conversion, and the same utilities who probably could have bought it at $10 or $12 a kGU were buying it at $18 and $20 a kGU. So they can take this bet because there's no consequence for them to get it wrong. And it really is an important lesson that we kind of have to remember. And it sort of gives rise to, okay, but what are they seeing that gives them the confidence they can take that bet? So what do we hear when we tell a utility, well, we think you should start thinking about your uncovered requirements? They'll point out three things. They'll say, look, if I look hard enough in the spot market, I can find tier one production. If I look hard enough, I can find Kazakh origin production. And of course, I can find Australian origin production from BHP. So I don't feel like there's a shortage that I need to panic about right now. And then they say, and in the midterm, sort of the 2 to 3 to 4 years out, those sources of uncommitted primary that are available in the spot today, well, let's face it, they're in the hands of SOEs in some cases, or diversifieds who aren't making decisions based upon where the uranium price is. So I bet they're going to continue to do that. So I actually think if I dig hard enough, I can find material in the next couple of years too. And if I can't, I can find an intermediary who will buy it in today's spot and carry it for me out into the near term. And then in the longer term, they say, look, the SOEs aren't going away. So there's like some 70% of the supply of uranium that's going to be sticky because it's SOE driven. So they're not going away. And I know you're going to restart MacArthur Cameco, and the Kazakhs are not going to stay at 20% below their subsoil use. They're going to at least go up to the subsoil license use, and they can go 20% above. And by the way, look at all these projects as well. Look at all the 13, 14 projects that are apparently shovel ready, and they're de-risked, and they've figured out how to get through regulations in record speed. And they're reporting costs that are below what you, and in some cases the Kazakhs can do. So the signals aren't there to make me worry yet. And as I say, let me emphasize, I think they're wrong, and I'm willing to take that bet. Yeah. But that bet is causing a delay for a basket of utilities. And so then we have to step back as investors and say to ourselves, this isn't just a demand side problem. What are the signals that we're sending from the supply side that are reinforcing this? Well, we're sending the signal that every producer today who produces more than they have committed to sell is contributing to the problem. So if we're invested in those, we should be saying, stop doing that. Every producer who plans to produce more than what they're committed to sell in the near term, we should be telling them as investors, stop doing that. And then, of course, everybody who's promising all of this supply that's not only cheap, but completely stop doing that. Step back, let the market evolve. Because right now, all we're doing collectively as a group is saying, don't worry about the supply of uranium. Now, I've been through these cycles. I've seen them before. Not all the projects are coming online. Some of the SOE production is coming to an end. The carry trade is drying up. The facts aren't on their side, but they're willing to take the bet because there's no consequence if they get it wrong.
Mm-hmm. Okay. Yeah, you talked about producers, essentially selling into the past market. But what I've actually seen over the last couple of months is producers have been buying product, and this is sort of unique since I've been covering the sector in '07. You've always had uranium participation there since I think 2005 or so. Yellowcake more recently, and a couple other smaller ones that buy physical product. But now we're starting to see some of these uranium companies buy, and they're doing it for different reasons. I think the most sustainable reason is the companies that are purchasing, that are getting products, getting production ready, and they want to either entice, sort of de-risk those operations, have material ready just in case ramp ups are a little bit slower, maybe get some off takes. We've also seen some people pad their treasuries. Maybe they plan to borrow against it as they build some of their projects, and we've got others that are probably speculating, and hopefully that material doesn't come back into the market. But what are you seeing now from sort of the producer side, or what's your take on the buying? More on the producer side than the investment side, let's say, from some of your peers, let's say.
Yeah. So I think it's an interesting development. It doesn't fit with our approach. I said earlier that there's no substitute for good old-fashioned utility demand, because let's face it, when a producer comes in like us to buy, we're buying for a committed sales portfolio. So we're buying for yesterday's demand, right? So yeah, we're demand in the market, but we're yesterday's demand in the market. When the junior exploration companies buy uranium, it's not going away, it's still there. So a fuel buyer is going, okay, well, that's interesting. It's just moved from here to over here, but it still hasn't been consumed. So it doesn't contribute immediately to their kind of sense of scarcity as a fuel buyer, because they still see it. And they believe that it will become available at some point. And so for them, it really is a function of, and for the investors who have endorsed that, be very clear about your rules for what you do with that uranium. If you plan on redeeming it, redeem only to utilities, so it goes to an end user and never comes back. Don't churn it. Don't redeem it to an intermediary, because they're just going to churn it in your face, and they're going to drive the price down. So with a clear set of rules, it can be a really interesting strategy and an incredible store of value, because I think you and me and everybody else on this call believes the price of uranium is not where it needs to be. And so the chance of it appreciating on the balance sheets is really strong. I'll tell you, we're not buying to hold because we discovered it's an overhang. So I don't know that I'm persuaded by the argument that it helps lubricate a term contract or an offtake with a utility, because I know how utilities look at it. Utilities go, you look like you have an inventory problem. And you're going to them and saying, you look like you have an uncovered requirements problem. And they say, well, you look like you have an inventory problem. So one of the reasons we got rid of our buy and hold and our big inventory is because it was an overhang. So I would watch that very carefully and see if that's actually contributing to an overhang, or if it's contributing to a sense of it's in the hands of convicted entities and they're not going to release it. But I think that on balance, the buy side of the market doesn't see it that way yet. So interesting. I think some discipline needs to be demonstrated, and if demonstrated, I think it could change the perception of the availability of material.
So, with these pounds coming out of the market, how deep is that spot market? Because we really haven't seen uranium prices jump yet. They did hit 25 earlier this year, but that started the year at $30 and we're at $30 now.
Yeah, I made an observation last week during our Q1 call, and I was saying we didn't test the spot market by and large with this buying. If you look at a lot of the buying that occurred by the junior exploration companies, a lot of them bought out on the curve. They bought 6 months out. They bought 9 months out. One of them, I think, bought everything 12 months out and beyond. So we didn't actually really test the spot market. Now, they may have done that because they went in to try to find material in the spot market and discovered it wasn't available, or discovered that if they did start buying immediately in the spot market, the spot price would jump, and then their fundraising would only end up with a smaller amount of pounds than they had anticipated. So on one hand, it's good news. It's good news because now they've created homes for some of the uncommitted primary production that was destined to come into the market into that window. But there is a bit of a missed opportunity, David, because we didn't truly, when we buy narrow to the spot market. That's the only way we buy. And when we buy under those terms, we find the market very, very thin. And we think the buying behavior that we just saw from the junior exploration companies reinforced that the market was thin. They went out along the curve because they said we couldn't find it immediately. Of course, my head goes to, well, why didn't you stay on the near end then and help truly discover what the real price, the real spot price available today for book transfer and financial close, what that real price is? Because by buying it out on the curve, they created an incentive for those who were going to receive those uncommitted primary pounds to push down the front end of the spot price, so that when they receive those pounds to then flip into that sale, they made their margin on the discount, as opposed to make their margin by restricting it to the market and pricing it a premium. So interesting strategy. We're not following it, and I gave you the reasons why we're not following it. Bit of a missed opportunity, but by and large, it's less material churning around the market, and that's good news.
Okay, so are you able to find material in the short term? Is that something Cameco is going to do and actively purchase? And what might we expect for the rest of this year?
We will be probably the largest spot buyer in the market. When MacArthur's down, for Pete's sake, and Cigar was down for the first quarter of the year. So, and we have a big committed sales portfolio. So we are going to be the biggest buyer again, and we're the most inelastic buyer, which is something that always surprises me, that folks are phoning us, offering us material instead of finding how far we're willing to chase it up the price curve. And David, I'm not daring them to do that, but it's interesting that they're not taking that approach. But for us, we'll be very active. When we buy on the very narrow end of the spot market, and we're buying for a committed sales portfolio. So we know the product form, we know the origin, we know the time frame, we know the location it needs to be delivered at. So there are a rigid set of criteria that we look at when we buy. And we've been saying for some time, the market can be awfully thin when we buy on. Like if we said we don't care what the origin is, we can find material. But if we have a contract that requires or perhaps excludes certain origins, we can't always find it. So when that happens, you see us buy a lot. We buy risk mitigation pounds for delivery into the committed sales portfolio later. But then when we see a market where there seems to be some willing sellers, hey, we'll step back. It's not our job to hold the market up. If people want to sell it to us cheaper, we're fine with that, because then we flip it into a committed sales portfolio and we put the margin in our jeans, not theirs.
Okay, so we're almost up on our time here, but maybe just let's talk quickly. Cigar Lake has restarted. I think we're waiting for some guidance there. But maybe can you give us an idea of what to expect from McArthur River and Key Lake? Is it too early to be starting to talk about those two?
Yeah, it remains too early. So we've had success with about 60 million pounds and counting in our off market, building up our contract portfolio, but that's not where it needs to be. And until it's where it needs to be, it's why you don't hear us talking about our exploration portfolio, and you don't hear us talking about the restart of MacArthur or our brownfield pipeline, which is going to leverage a lot of value going forward, because we understand that's the wrong signal to be sending. That's why we do it. And then we look around and we say, well, why can't others figure it out? Why you stop sending that signal that there's going to be all this supply? So it's just too early to be talking about MacArthur River. Very active right now as a mine and mill. We've got lots of people up there, not just because it's in care and maintenance, because as you know, we've got a very aggressive digitalization, automation program, because we viewed that as the best mine and mill complex in the world when we brought it down into care and maintenance. When we bring it back, and we will bring it back, it's just the question is when, we want it to be even better by harnessing the best technologies that we see being used elsewhere and where they're applicable up there. So it's a very active site, but that's to get it ready to be the mine and mill of the future.
Perfect. Okay, well, why don't we leave it there? We're up on our time here. So, Grant, it's been a pleasure to talk to you today. I appreciate you being part of our uranium conference.
Yeah, enjoy your conference. Thanks so much, David. Bye-bye.